Hello everyone, I'm Dr. Stock, and in this video we're going to answer the question, will the market go higher from here? Specifically, what part of the market? That is the Nasdaq, and even more specifically than that, the Nasdaq 100, because we'll be looking at QQQ, which tracks the Nasdaq 100, and we'll be looking at the components that make that up. So in this video, you will see me use the Moomoo app, and right now down in the description you can find that link to get up to 20 free stocks using the exclusive offer that's found using my link that's down in the description. Just sign up, deposit your cash. $100 more gets you 10 free stocks. $1,000 more gets you the 20 free stocks, so check that out. And that is just with the deposit. And also one more thing, while you're down there, check out the link for the Patreon to get access to my Patreon exclusive content and be a member of my private Discord community. We'd absolutely love to have you over there. That said, let's get right into talking about the components of the Nasdaq 100. And I'm going to look at just the top 9 companies that I have on here. Honestly, the top 8 is really what I'm interested in. However, number 9 gets an honorable mention because it's Pepsi. So we'll get to that in just a moment. But Microsoft making up over 13% that we have in the Nasdaq 100, so that's important to pay attention to that. Apple making up almost 13%. Between the two of them, that's 26%. That's over 1/4 of the Nasdaq 100 that we're looking at just in the top 2 companies. So their charts and their prices are very much worth looking at. Amazon coming in at 6.5%. Nvidia just over 5%. Alphabet, when you combine Google here, that makes up an 8% weighting. And then we also have Meta following that with that's Facebook. So almost 4%, Tesla almost 3%, and then Pepsi coming in here. That's the last one we'll discuss, even though you can see some of the other ones that are here, also big names. Pepsi coming in at 2%. So Pepsi is one of those consumer staple type stocks where you don't really get a lot of movement. I don't think there's a lot that's interesting. I'd rather look at the tech values that we have in here right now. So let's go on with Microsoft first, and then we'll go from there. So let me bring up Moomoo. As I've mentioned, can get you those free stocks by clicking that link down in the description. So let's open that up, close that. So we get a bigger picture here, and we'll start off with Microsoft since they're at the top of the chart. So Microsoft, you can see the sort of run that they went on. They peaked at $344, almost $345, and then sold off throughout 2022, and then had quite the rally coming in. Let me see, I think January 9th was this date right here. And before then, with the market, actually, they were trailing the market bottom back in October. So back here's October 13th, and they actually bottomed lower than that. And we actually didn't see that with a lot of the different growth companies and stuff where there was a second bottom that was even lower. However, there it is, and you can find out at least where those massive support levels are. So we actually sit at this resistance that we had all the way back in March of 2022. And for Microsoft, will we end up seeing this push higher? We actually see their momentum looking pretty good, their volume tapering off a little bit, and this slow, steady upward climb that we have happening. Really, we have a lot of work to do to break up above that resistance. And if we do, if we're able to, imagine Microsoft putting on another 10%. If we did, the Nasdaq, specifically the Qs, when we talk about that, that would really have a lot to go up just from Microsoft's weighting. Now let's go ahead and look at Apple. So I should say that Microsoft, honestly, after the run-up that they've had, a resist is more likely than breaking through resistance. So we'll see if that stutters for a little bit longer, or if it is something that settles back down a few percentage points. In the meantime, while some of the bigger hedge funds, some of the bigger institutions go and look for where they can find that value left to go, or maybe that AI investment is something that they think that Microsoft is going to continue to innovate and dominate, and then maybe it trades up from here. All right, better look at Apple. All right, and Apple has a very similar chart in that they really did come out here and peaked at this previous level that they had. Now, this one does go all the way back to August, back with the Jackson Hole meeting from the Fed, and the Fed coming out and being very hawkish in that, and really sort of, if we want to talk about Fed rug pull, that would be a time that we would have seen that happen. And you can see the market bottom for them all the way into end of December, beginning of January, and then taking the rise with the rest of tech. And with Apple, I don't think that they would drop a lot. Honestly, maybe about $5 from their current strike price. My goodness, not talking about options here. From their current trading price, their current closing price that they had from yesterday. So about $5. So maybe from where they're at, maybe up to 3% that they would pull back a little bit just along these bottom parts of the candles here. If we were to draw a trend line for the bottom of this bullish channel that it's currently trading on, I'd say that we have come off the top of that and we might settle back down a little bit. So maybe we see some softness in the Qs when we talk about that. So the next one that we have is Amazon, and this one is actually pretty interesting when we look at Amazon. So Amazon actually has, if it comes to fruition, the momentum's looking good. They actually have a golden cross moment yet to hit. So Amazon could be, out of the big stocks that we have in the Nasdaq 100, Amazon could break this resistance that we see at these levels right around the $113 mark, and they could actually push up significantly following that and rally maybe up to about $121. And we're just going to have to see. They do have their own issues, their own troubles, and if we see economic slowdown and we don't see the deliveries, honestly, that Amazon Web Service demand is going to be the huge driver for them. And there's a big competition right now across cloud storage providers and web service providers to really push their usefulness and use cases. And we'll see if Amazon's able to innovate from that. So that one, absolutely huge. And that's actually one of my favorites. So given to you here in this, as we look at that golden cross moment coming up, I don't think that should be overlooked. And let's actually skip Nvidia just for a quick moment, because I do want to go to Google. And honestly, the charts are going to be the same whether it's GOOG with an L at the end or GOOG without the L at the end. So this is ticker symbol GOOG for Google. And you can see it had its golden cross moment. And look at the rally that Google went on since that time. And yeah, I know that there was some news that came out with their different AI features, and that really helped spur things on. I think that their run possibly does peak out pretty soon, maybe another 1% to 2% from where they're at right now before they really hit that resistance. And the market is either going to stall out, or I think the market's going to settle a little bit from this point in time, especially with things like the debt ceiling hanging over top of our heads. And even if the U.S. doesn't default, still that nerve-wracking feeling of, will the U.S. government run out of money before they decide to move the debt ceiling? That drama can be something that actually does weigh on the markets. We want to watch for that. So Google had its golden cross moment, and you can see what happened. Amazon is near that golden cross moment, and perhaps that is one of the areas, one of the bright spots that we see yet to happen in the Nasdaq, so or in the Qs if that's what you're trading. So I'm going to backtrack to Nvidia. In Nvidia, I think when it comes to the AI space, that they're really standing to capitalize, and they are just above this previous peak that they had. And it is possible that we actually do see them start to settle a little bit from where they're at. If you can look at this chart that we have over here on the right-hand side, this is a lot of concentration at these higher prices. And so this is something that could actually come back down and retest their 50-day simple moving average. And honestly, with this previous peak that we have over here, that actually puts us at a pretty nice spot to find some support. I don't think that they tumble back down to the ground, not with the current momentum that we have in the AI space and their ability to capitalize as part of that infrastructure for providing AI services. So Nvidia could have some of that softness. So let's also stop by Facebook real quick, and then Tesla, so Meta. I'll probably call it Facebook for the rest of my life. That's the one thing about being around for such a long time prior to that. And when we look at Facebook or Meta, they actually are sort of in the same situation that Nvidia is in with these high prices, where they could come back down, maybe settle just above the 50-day, maybe back down to the 50-day, but that's giving up quite a bit of percentage given the runs that they've been on. They have significant resistance to overcome from these previous peaks when they gap down after rebranding to Meta and saying that they were going to, actually, I don't know if that was a rebrand moment. I think that was earlier. When they talked about the big spend on the metaverse. Actually, I think this was the earnings that happened following their investment into the metaverse, and the fact that they just a complete cash dump with no promise of any sort of profit through the metaverse. And I think that was the big reason for that gap down and the subsequent fall that followed. So that's what we got for Meta. And then finally, we'll finish up with Tesla. And Tesla's going through its own hard time right now. We'll see right now it's actually on a bearish channel, and it is possible that it does continue to drop, and that there was a lot of people saying, hey, at 150, I'm back in on Tesla, or I'm a huge buyer at Tesla. And maybe you're in that boat, maybe you're not in that boat. For me, I like Tesla. I've done a full workup on Tesla, and I think that there's a lot of promise in their future. So I will take advantage of these hard times, and we'll see if it does hit probably down around here. Honestly, it is possible we come down as far as maybe 140 before bouncing back up again. We'll see if it continues to make any sort of dip from where it's at, or if they have some sort of big announcements or big moves in the market that actually take it otherwise. But we're just going to have to watch that and wait and see. Finally, let's finish up by looking at the Qs to see where the sort of road that we've been on. And when we look recently, the momentum has been falling when we look at the Qs, even though the price has been rising. That's a little bit of bearish divergence that we have happening. And we're near this previous peak, and I don't know that we have the conditions right now to give us the momentum to really smash through that. So if we have a nice few days in the market, or a really nice one day in the market to take us up to that level, we're about 1.5% away from the previous close to see that peak happen again. We could possibly rally. I do think that we have potential for some softness in the market, maybe to even come back down and retest what we have right here on the 50-day. And it is possible we only end up halfway there, which even so is still a pretty significant drop. That's dropping over 2% to get back down to about halfway, and about 4% to get down all the way down to the 50-day. I don't think that we have enough cause right now to really break the bullish momentum that we see happening recently in the stock markets. So that's what I have for you guys in this video. Make sure that you check out that link for Moomoo. Not only do I use it as my desktop app, but they also have a wonderful trading app where you can see their earnings calendar that they have, and you can actually attend the live earnings calls. They give earnings summaries, earnings projections, you name it. It's all in that app, and you can get up to 20 free stocks by using my link down in the description. Also, don't forget, if you want to hear more of my commentary, check out that link for the Patreon down in the description. Absolutely love to have you over there as part of the community. If you like this video, please don't forget about that like button, subscribe to my channel if you haven't, and ring that notification bell to see anytime that my videos come out. I am Dr. Stock, Doctor of Education. We'll see you in the next video.